As you've gone through your career, what are the key lessons you've learned on how to invest that you'd love for our shareholders to know?
The first one that comes to mind is don't fall in love with your companies. These are small cap stocks. They're not family members that you're stuck with for life. There's an appropriate time to own a stock, and not all great companies are great stocks, and that's an important lesson, I think, within that lesson. But have an open mind, be objective. We have a very strict set of criteria we're looking for when we make investments, and when the stocks stop checking the boxes, then it's time to take action and reduce exposure. It sounds simple. It's a lot more difficult to execute it day to day because there are tendencies, just as human beings, there's a tendency to form an emotional attachment to a stock, and you don't always look at it objectively. Let's say you've invested a lot of time in studying a stock and really studied the financials, and we're doing all that same investing of time and research. There's a tendency, though, if you've made that investment and you know the names of the CFO's children and you are really close to management, you might not see things as objectively, and it might cause you to hang on to that stock too long. We make a point of doing all that research, but make sure that we're not having that emotional attachment. We've got a set of rules that we follow closely that are very much tied to answering the question, does this stock still have fundamental momentum? And if it's not checking those boxes, we take action. And it's this sort of no-nonsense approach that we have to selling, which has shown to be very value-added to our process.